Hi guys, welcome to accounting. We're going to start chapter 2. It's recording business transactions. And there is a copy of your chapter in your module for accounting. And it is there for your reference to be able to see it whenever you need it. So just know that it is there. But I'd like to look over chapter 2 before you begin. Our learning goals for Chapter 2 explain the double entry framework of accounting. We're going to describe the T account, and we're going to be explaining the rules of debits and credits. Now that's not all that we're going to be doing in Chapter 2, but that's how we will be beginning Chapter 2. I want you to remember, and let's review the accounting equation. Remember, the accounting equation is assets equals liabilities plus owner's equity. And remember, whatever you do in accounting, you have to keep this equal. If you do something on the asset side, then something will impact the liabilities and owner's equity side, because you always want to keep this and this in balance. Now, we're going to learn about something called a T account, and it's shown here, and it's called a T account because that's what it looks like. It looks like a capital T. Each T account has a title, and that's the title of the account, recording a place for debits, and recording a place for credits. Now, let's talk about each parts of these. On the T account, you see it's just like a capital T, like we said. On the top of the T is the title of the account, like cash, accounts payable, revenue, whatever the title is. Each account has its own T. Now, you have a left side of the account, and you have a right side of the account. The left side of the account is called the debit side. That's all it means. Debit means on the left side of the account. And on the other side, you have the right side of the account, or the credit side. And all credit means is it's on the right side of the T account. Debit and credit don't have any values to them. It's just the placement in the T account. So remember, the left side is called the debit side, and the right side is called the credit side. Okay, so now the rules of debit and credit. The normal balance of account side is the side that you use to increase it. For example, asset accounts have debit balances. For example, cash. So their normal balance is on the debit side because they normally have a normal debit balance. So in order to increase them, you're going to make the entry on the left side or the debit side of the account. If you're going to decrease them, you would make the entry on the credit side or the right side of the account. But all asset accounts have debit balances. So all asset accounts have debit balances. So, for example, for cash, debits would increase on the left side. And for accounts payable, the normal balance of accounts is the side used to increase. So liability accounts have credit balances. For example, accounts payable has a normal balance side on the credit, so you would increase it on the credit side. So credits increase accounts payable. Debits would decrease accounts payable. For owner's equity, the normal balance is a credit. So owner's equity accounts have credit balances. So to increase a capital account, you would credit it or enter it on the right side. This is the increase side. Debits would decrease it. And that's for all equity accounts. All right, for assets to review, asset accounts on the left side of the equation is the debit balance. They are normally debit balances, so they are increased by debits, they are decreased by credits, but their normal balance is a debit balance. For liabilities and equity accounts, they are increased by credits and they have credit balances. So that's how you increase them, is you credit them. Revenue accounts are the same way. They're increased by credits and they have a credit balance. All right, expenses are a little bit different. They have a debit balance like an asset does. So if you want to increase an expense, you will debit it or enter it on the left side. I'm sorry, you would enter it on the left of the debit side because they normally have a debit balance. So for each transaction, something to remember, your total debits will equal your total credits. For every transaction, your total debits will equal your total credits. And that is true. Remember, when you were doing your expanded transaction form, you had to have two entries. It's the same way with the T account, and we're going to look at that now. For each transaction, total debits will equal total credits. For example, this is a common transaction that we have done in the last chapter. Purchased office supplies for cash, $400. All right. We are increasing office supplies. Office supplies is an asset. It has a normal debit balance. So we are increasing it. We're entering it on the left side because we know that an asset has a normal debit balance. So to increase it, we're putting the entry on the left side of the T account. And the other side of the entry, we paid cash, so we have to decrease cash. So we're going to enter it on the right side because cash is an asset and it normally has a debit balance, or on the left side. So if we want to decrease it, we have to make a credit entry or an entry on the right side of the T account because we purchase, and our accounting equation is still in balance. Remember, assets equals liabilities plus owner's equity. So we increased an asset and we decreased an asset. We're still in balance. Our debits equal our credits. You have to do that for every transaction. And here's another example for an expense account. Paid $300 rent. And we know by reading the clues of a transaction, if it says paid, it deals with cash. So, rent expense. Rent has a normal debit balance because expense accounts have a normal debit balance. We want to increase it, so we've debited rent expense, or we've put it on the left side of the T account, and we have decreased cash because we paid cash. So since cash is an asset, like we said, and it has a normal debit balance, its balance is normally on the left side. If we want to decrease it, we must credit it or put it on the right side. Now remember, debit only means the left side of a T account, and credit only means the right side of a T account. It doesn't make a difference if it's an asset, a liability, an equity account, a revenue, or an expense. Debit and credit only means the position of the T account, what side you're entering it on. Debit is the left, credit is the right, regardless of the type of account it is. Now, here's a summary. Asset accounts, and you see assets equals liabilities plus equity plus revenue minus expenses. I know there's dividends and stockholders' equity in here. We're not covering that yet, so just disregard that terminology. But let's talk about assets again. Assets, they have a normal debit balance, so left side of the T account, and they are increased with debit. So you see the plus here on the left or the debit side of the T account. Assets are decreased by credits. So you see the minus on the right side of the T account. That's the credit side. Now, liabilities are the opposite. They increase with credits, and they have a normal credit balance. So to decrease them, you notice the minus sign here. You would debit them to decrease them. Equity accounts are the same as liabilities, and they have a normal credit balance, and you increase them by crediting or entering on the right side. You decrease them by debiting the left side. And I'm going to skip dividends because we're not dealing with dividends right now. Revenues, they have a normal credit balance, and you increase revenue with credits. You decrease them with debits. And on the other side, you have expenses, and they have a normal debit balance. So they will increase, like assets, they increase on the debit side. So to increase one, you will enter it on the left side. To credit it or decrease it, it is on the right side or the credit side of the T account.